And I want to do this. I did this earlier. I want to say hello to everybody. I uh, I just wanted to show you that I'm doing well, and I'm enjoying putting all this good stuff together for you and HGSI. And I've I'm doing. Let me just put it this way: I'm doing really well. I feel great, and I have a lot of energy, and I'm on a new program, as you probably know, and it's working for me. So I plan on being around a long time. Anyway, I am going to sign off and go ahead and start talking. Okay, everybody seems to have installed the add-on okay. I haven't had any complaints, and that's wonderful because if it's a smooth operation, I know that I can continue to update things all the time, and you can install the add-on without having any problem. Now, I keep posting the link for this PDF. This PDF is about Tom Williams and his approach to volume spread analysis. And I don't know how many of you know about Tom Williams, but he was really my first exposure to what we call volume price analysis and volume spread analysis. And he has been around a long time. Well, he died in 2018, unfortunately, but I think he was 87 years old at the time, and his vision was gone. But I think I've mentioned this before. He got involved in the markets when he came to the U.S. from Britain. He came from Great Britain, and he worked for an agency that assigned male nurses to males who were invalids and so on. And he went to work for a guy who was very active in the markets, and the guy evidently made a lot of money. And Tom Williams became interested in that, and they paid for, or his employer paid for the original Wyckoff correspondence course for him, and that's how he learned volume spread analysis. And that course, I believe that course came out in the, I don't know, the 20s. I've got the original course here, and it's, all the charts and everything are from the 1920s and so on. It's kind of hard to decipher. But anyway, that's how Tom Williams got started. And then he worked with this guy and some other guys. They called themselves a syndicate. They must have had other relationships with other traders. And he made enough money to retire, and I believe he was only 40 years old, and he went back to England and then got involved with computerizing volume spread analysis and came up with a program called Trade Guider. And it's been around since 2001, I believe. And it's a clunky old program at this point, but they've abandoned pretty much the end of day program and moved on to real time scanning. And I think they focus primarily on forex trading and so on. But anyway, he was the one who really initiated the computerized trading, and then other people, of course, have moved on with that. But fortunately, we have HGSI Investor software, and Matt incorporated VPA, what we call VPA, into the program a couple of years ago. Now, VPA and VSA are one and the same. It's just terminology. But if you look at Tom's principles, and let me see if I can bring that up here. I'm not going to go through all of these and waste time doing that. You need to go through this yourself, and I'm going to start a webinar series on VSA and VPA and go through the whole thing. I'm going to go through all of HGSI from the top down and really get into volume price analysis, volume spread analysis, and spend a great deal of time on that. And Talking about risk control too. Risk control is so important. So that's all going to come. I'm going to start sometime here this next month. I'll get the first few lessons together, and then I can build on those as I go along. I'll get a worksheet out, or a sheet out explaining what I plan to do. Now, if you go down to the bottom here, these are all of its principles. These are signs of strength and signs of weakness. But I added some other things down here. I took a webinar when he was still alive, and this is what he came up with. I just took his information and pasted it into a PDF file, and these are things that we're going to be working on in the webinar. Now, I highlighted these because these are important. Points to remember. This page and the next page. Strength will appear on down bars. Now, that's contrary to everything that many of us have been taught over the years. Weakness will appear on up bars. Background analysis of the chart is vital, so you look to the left. Has strength or weakness appeared at the top or bottom of a channel? Is there a major trend reverse? Is this a major trend reversal or a retracement? Is there good or bad news? Is demand overcoming supply, or is supply overcoming demand? Before we take a trade, we really should be asking ourselves all of these questions. And then here's a few more that I highlighted. VSA is a discretionary methodology that still requires discipline and money management. Very critical. VSA is much more effective when used with support and resistance. I didn't highlight Elliott wave analysis because I think they dropped that towards the end of Tom's life. I don't know anybody who uses Elliott wave. You must use more than one time frame to see the bigger picture, and this is a very important point. The chart never lies. Rely on your charting skills. Okay, let me post the PDF for anybody who just came in, and I will take you through what I've come up with here. Now, why did I even bother to do this, you may ask? Most of us have been using candlesticks for years, and why change now? Well, I went back and I started reviewing some of his information and looking at some old videos of Tom Williams, and he used bar charts, and he did not even use the opening price. He just used the closing prices, and I think I'll go in here, and even though this computer can handle the automatic updating, it's kind of a distraction. Let me turn it off. I'll just go to manual updates right now, and if I need to update something, I'll just click on my F5 and it'll update the warehouse view. Rick, you want to know how I got to that chart? What, this chart? The charts that I'm showing now? I'm going to go through that right now. Did you install the add-on, Rick? If not, you can do it later. Okay, well, the way I got to these charts is I brought up my quick pick, and you have two new folders here. You have Williams Spread Analysis, VSA, Williams Volume Spread Analysis, or VSA, thin bars and thick bars. I asked on the Skype board if you wanted thick or thin, and I got multiple opinions, and so I gave you both. Now, I'm going to go through each one of these, and I'm going to just use the thin bars, but let me show you the difference. So here's chart number 1 with the thin bars, and here's chart number 1 with the thick bars. Now, some of us like to have the thicker bars because we don't see as well as we used to. So it was just an easy matter to give you both, and it doesn't take any more resources or anything. So I'm giving you both. Let's just go through this and you'll see my thought process, and then I'll take you to the warehouse. This is I'm going to get this out of the way so you can see all three charts. The way I set up my screen, and I know a lot of you don't have big monitors, or I assume you don't, but I have a 34-inch here, and this is a daily chart, a weekly chart, and a monthly chart. I want to look at all time frames. Now, this particular stock right here, that Spark Network that I have up, you can see that on the daily chart, it is starting to move up. It looks pretty good. Now, over here on the weekly chart, too, you can see that there are a series of 3 higher highs. And Tom Williams charts allow us to see that, let me zoom in on this, that if the bar closed higher than the previous bar, and if it continues to do so, these are going to be colored green. So I think it's easier to see the trends with these charts. And that's why I did it. And plus, HGSI already had the capability, so why not give it a try? Now, Paul Reicke's on here. He's a hardcore candle guy, or he was, and now he's kind of a hardcore Tom Williams guy. So it really works. So it's very easy to see when this stock went from a downtrend to it started basing here. And by the way, one of Tom's main principles was that strength comes in, strength appears on down bars, and you can see it very clearly here. Here's stopping volume, here's stopping volume, here is an up bar, but these 2 bars were down bars, and strength started appearing here. And then there was confirmation of that strength on the weekly chart, and it started trending then. Now, when this third bar here surpasses the second bar, that's really a price change. You can't see my cursor? Ghana? Okay, just a second. Let me pause the video. I'm going to change. Okay, so we're back with a black cursor on a white chart. That's much better, isn't it? Okay, so as I was pointing out here, strength was coming in on these down bars, coming in here too, but you know, there weren't consecutive green bars here. There was one green bar, then a single green bar. Now when we get up past the high of this second one, that's a pretty good indication that there is a price change on the weekly chart in a stock. And this corresponds to what's happening over here. Okay? And this is all stuff that we'll cover over and over. You're going to start looking at charts differently when you use these charts, because I believe because of the bars and the volume VPA flags integrated in the program, it's much easier to see when momentum starts changing in these stocks. Let me go down to the next one. I'll just go to the quick pick. Now, this one is end of day and intraday. Now, this kind of dominates the chart, and if you don't have a high resolution screen, it's probably going to be too big. I can make that smaller when I do an update, but for me it works just right. And what I have here, what I call this end of day and intraday, because it gives information for both the end of day, which is down here in this portion, and the intraday up here, so I can compare yesterday's activity. Volume was low yesterday, and it closed down at 61% of the range, but today the range is at 72%, and the volume is increasing. So what do we have here? We have a stock that is moving up on increased volume. So what does that tell us? It tells you that demand is moving in, and we have an effort to rise. Now, it would be a lot better to buy this stock back down in this area, and in the future, we need, including myself, to concentrate more on these opportunities when these stocks are starting to move, rather than chasing them after they've started to move. Because one of Tom's other signs of weakness is that weakness shows up on up bars, and it's showing up a little bit here because You see where the closing price is on this? Well, not the closing, the current price, where that little wick is. So they're starting to sell into this a little bit. You'll start looking at charts by bar is what you want to do. It's just, see, I'm going to zoom in on this. If you start looking at these, now this, let me use this bar as an example. This looks negative because it's red, but when you really look at this bar, you see the open and you see the close. And you look down at the bottom and you see that there was very little volume. What does that tell you? It tells you that there was very little selling pressure as it came down here. So strength was showing up on this down bar, which turned into an up bar. These are the kind of things that we want to look for going forward. Let me post that PDF again. Somebody just came in. So it's if you go through that checklist of things on the PDF file, I think it's going to help. And we'll see. But, I'm pretty excited about this methodology and these charts. Now, that's 1A. This is 1B, just for intraday to day. When you're using intraday and you don't need the end of day, the information is right here. Same chart. Now I'm going to go down to, well, I better use my quick pick here. Now, these are a couple of charts, industry group and the NASDAQ overlay, and the industry group and the SPX overlay, which means that these charts have real-time NASDAQ overlay. If you look up here, you'll see it says NASDAQ red. This is real-time on the NASDAQ, and this dotted line is the group line. Now, you're going to have to update the group lines throughout the day. That's easy to do. Let me show you how to do it. You go into the designer, and if you click on industries, let me take this off of here, the filter off. See, whenever I open something up like that, it pauses. Okay, so I have the industry groups here, and you go under Tools and Rebuild Indexes in Group, and what it's doing, it's taking the current intraday information out of Thinkorswim, and it's building current groups. So I'll get this out of the way. Now, this information right here, this dotted line on the group, is current. So what do I see here? I see that this stock is outperforming relative to the group because the group has been coming down and this stock is going up. What group are we? Internet-based services. Don't have any information on earnings and revenue, but for some reason they're buying this stock. So this is compared to the NASDAQ. The next one is compared to the SPX. If you're looking at a NASDAQ stock or an SPX stock, you can look at these. I just give them a quick glance. But it's pretty nice that we can have the indexes in real time updating, and you can see how a stock is performing against both an index and the groups. Now, number 2 is a weekly chart. So when I put these charts up, I put the number 1 chart up first. I generally just look at this chart, and then when I'm doing intraday, I'll go to 1B and leave this up all day so I can see what's happening, okay? And then the weekly chart I leave over here. I just open up another chart. By the way, if you don't know how to do it, under Tools, if you select Link Multiple Chart Windows and Warehouse, selection follows chart, open up one chart and do that, and then you can open up multiple charts and put them side by side. And then when one updates, the others will update also. And so this is weekly. I just quickly, in the drop-down list, I quickly look for number 2. Monthly, I quickly look for number 3, and then they come up, and then I have everything I want in my layout. Very simple. Okay, and then let's go to another stock. Well, let me finish the charts. I'm sorry, I got it out of sequence here. So if you want to look, okay, now we're going from a chart like this, and we want to see what the context of this chart is. I'm going to get rid of my crosshair. What do I mean by context? Where is it relative to the moving averages? So if I want to see the context, I go down to the fan chart number 4, and I can see that this stock is trading well below the 200, the 100. It's above the 50 and the 18. It's above the 3 and 6 also. So it started going above the 3 and 6 down here. But this stock is in a major downtrend, and you can see it over here very easily on the monthly chart. So we're starting to get some accumulation here. Who knows if this stock will go, but this helps us put it into context. Okay, the next chart is support and resistance. It draws support and resistance lines automatically on the chart. I don't know if you'll ever use this or not, but it uses the, I can never think of that indicator. What is it, Paul?
Zigzag.
Zigzag, thank you. It uses the zigzag, and these are the numbers I put in here. Number of lines 3 and the sensitivity, so it has to move that amount of sensitivity before a line is drawn, and it's based, it doesn't look back. I mean, it looks back to a certain point here, but it just gives you a visual reference, like a breakout here. Where would support be if this came back down? It would be right in here. I don't know if you have any use for this chart or you use it, but it doesn't take any effort for me to put it in here. Now, the VPOC is a volume point of control. The 10 period, the 30-day period, and the 90-day period. This particular stock, if you look over here at this green bar, the 10 is obviously the most sensitive. So when it crosses over the 10 period volume point of control, it's gone from bearish hands to bullish hands. But the problem with the 10 is you can see that it's pretty erratic. But when you get it to this point where on the 10-day, the 30-day, and the 90-day, everything's green, that pretty much tells you that the bulls have gained control of this stock, whereas during this period here, where everything is a reddish color, it means the bears are in control. This brown line represents the 10-period volume point of control. Just another nice tool to help give us confidence to take a trade. Okay, got one more chart. This is a VSA chart. Now this VSA chart, it just looks like a regular chart. By the way, while I'm thinking of it, I've got the information from HGSI up here on all these charts. If you want to clear this information, just click outside where the current price is, and that goes away. But then, I have to get out here. But then when you click on a bar, it will reappear. Okay? How do I actually open a second chart? A new HGS charting window right here under File, Rick. Oh, he wrote that to me privately. Don't post anything privately. Let everybody in the group see it. So anyway, you check those two things, link multiple chart windows and warehouse selection, and then you just open a new charting window. And if you have a fast computer, it'll come up very quickly. Okay, so what is this chart? My VFB chart. What this does is it takes whatever filter is in use in the warehouse view, and it transfers that filter to the chart. So I'm going to open this filter up. And what I'm looking for here are stocks intraday whose last price is higher than the prior bar's price. And let's see if it works. Okay, let's let this... when I open up a window like that, it always recalculates everything. So, okay, let's go up to the top of the list here. And the next thing I'm going to do is show you what I'm doing with these warehouse views. Well, that's not a good example. That's a thin stock. Let me find something with some volume here. Wisdom Tree. I don't want that one. Here, Industrial HD Supply. Well, that is one ugly looking chart, isn't it? Forget that. I want to find something that looks decent. Okay, here's Beazer Homes. So if you have this VFB chart up here, when you click, you can check what the filter is, but when you click through, it's going to tell you when the condition of the filter is true. And each of these green areas indicate that the bar was higher than the previous bar. The closing price was higher than the previous bar. So over here, you can tell here was a red bar that was down. This is green because this closing price is higher than this closing price. This closing price was higher than this closing price. This closing price is about even. I'd have to go look at the numbers, but I'm not going to. And then this closing price here is obviously higher than that. Yeah, you have to click the line on the warehouse to transfer this file, this filter, over to here. Otherwise, you get nothing. Let's do one more. See if I can find a... how about this Arthur Gallagher? That should trade a lot of... it doesn't. Here's one that's trading 10 million. So I'm transferring the filter over to here. None of these meant the conditions, evidently. But I don't know how well this works on the intraday. I know on the end of day it works really well, and you may never use this. But it's transfers, briefly, it just transfers the filter to the view. Okay? Canadian Pacific Railroad's probably a good one. Yeah, it seems to be working on the intraday too, because every one of these closes were higher than the previous day. Okay, let's move on. I'm going to put this back to my intraday chart, and I'm going to explain to you what I did. I put the charts together, and I thought, after that, maybe I can come up with a couple of scans that will work to help us with this methodology. And this is what I came up with. And there may be revisions in the future. I'm not sure. I just put these together 2 days ago. But it's under Tom Williams, 12 and 13 in the warehouse view. VSA scorecard, close higher, bullish. What I mean by that is the close was higher. This is yesterday, remember, and this is today. The close was higher yesterday, which would be right here where the cursor is, than the prior day's close. And there were 848 securities. Now, that's an awful lot of securities, and I don't think you want to deal with that many, but what I'm going to talk about going forward here, and I'll do it pretty soon, is we'll start looking at a few specialized groups, or you build a watch list, and those are the stocks you follow. But this is what I came up with, and it really seems to work. Now, I'm going to leave it on the end of day here. Let me get this out of the way for now. And you can see that yesterday, I'm going to use yesterday, The close was here compared to the prior day's close. Now, I'm going to go down to the bottom, and let's look at 848. And this is yesterday. This is the one I'm looking at, comparing it to the prior day. So the close was higher than the prior day's close. And notice that this isn't nearly as dramatic because the effect of the combo really wears off as you go down to the bottom. So let's go back up to the top. Now, let's take the top stock. Let me do an update. I'm going to do an F5. Let's see. Wow, look at the futures. Closed up 83. A lot of people got shaken out today. Anybody know what the news was? Is the impeachment trial over? Maybe that's it. Evidently, they're not too worried about the virus anymore, right? Okay, so here is the way it ended. This is yesterday, though. So I need to go to the intraday, but let me go to the top chart again yesterday. Notice that this closed at its high, and the volume was really heavy yesterday. Why is that? It's because of the combo rank I'm using. Now, those of you who are familiar with HGSI know that we have both filters and combo ranks. And what I did is I built a combo rank, which is just percentage range and percentage volume compared to the 90-day volume. And I split them 50-50. And my reasoning here is that I want stocks coming to the top of the list, which are showing strong volume and a strong close. And that works very well. This is extremely powerful in HGSI. You can't do this in any other program. So let's drop down here to the intraday and see what happened. I did the update. You can see that it's the time was 4:01. This stock only trades 110,000. Here's that HD supply. Oh, that's the one with the bad chart, isn't it? Let's look at Santander. And this is a good example of the combo. Now, this is the same combo, but I'm using percent range and percent volume, but I'm using the intraday version of the combo. So let me see if I can pop that up quickly. Same combo, but see, the fields are intraday fields. Works the same way. This way I can keep track, or we can keep track, of where the strength is in the market intraday. Amazon's up 150 on earnings, Carrie. Wow. That's got to be an all-time high, doesn't it? So that's what shot the futures up. Okay, we'll take a look. Well, it's not going to show up in HGSI because that's after the market. I can put AMZ in. Here's Amazon down here. This is a little 5-minute chart that I keep in my window so I can plug symbols in. Okay, anyway, getting back to this. This chart, or this bar here, I should say, is near the top of the list because it is reacting to what I have in the combo. Here is the close, here is the volume. So this is why it's towards the top of the list. So during the day, what you can do, if you're using Thinkorswim running in the background and you have it on automatic updating, or even if you don't, if you're using manual updating, you can see which of these stocks are gaining the most based upon percentage range and percentage volume. And every one of them, I need to bring a different chart up. I keep running into that. Here's Trump's bank. You can see what's happened to it, Deutsche Bank. Anyway, you can see which of these stocks are near the top. They are at the top of their range because of the combo, and also they're showing very heavy volume. Works very well. Here's Hyatt Hotels. It's near the top of the list. It is currently, this is how it works. I'm looking at, on the intraday, I'm looking at the current closing price, or the current price at any point in the day that's higher than the prior day. This works any time of the day. Now, when it was trading down here, before it achieved a higher close or a higher price than this particular chart, it would not have shown up near the top of the list. It wouldn't even have shown up because it wouldn't be passing the filter. So the way the day ended, the 429 securities actually are closing, or did close, higher than the prior day. Let's go down to the bottom. Remember this bar here, how strong it is, and the volume. Now I'm going to go to the bottom, and let's see what this REIT looks like. Now see how this is a very small candle, candle bar I mean, and notice the volume is putrid. That's because it reacts to the combo. And this stock, the close is higher than the prior day's close, so that's why it passes the filter. I want you to play with this tomorrow and see what you think, because it works, and you can then start applying VPA, VSA principles and looking for potential trades. Any questions? Now, I don't know if any of you short or not, but I put the reverse in here. If you're looking for stocks that are bearish during the day, here's intraday. It works the same way, just in the opposite direction. You can see that. This is an IPO. This close is lower than the prior day's close. Well, anybody in Amazon? I know Jeffrey is, and I know Jeff Bezos is, and I know Trump isn't. Anyway, wow, what a move. They must have had some really stellar earnings. Okay, any questions about either of these scans? Now, like I said earlier, you don't want to scan every stock in the universe, or maybe you do. But it may open your eyes. You want to look at TQ. You guys are looking at charts and not listening to me. Wow. Okay, this is a 5-minute chart here. Yeah, huge move. And notice on my chart, I use VPA on my 5-minute chart also. If any of you don't have this VPA, I've got it. Somebody posted it years ago, and the code is very similar to HGSI. And this is what I look for if I'm looking for a trade during the day. Let's take a look at Boyd Gaming, the gaming stocks. PIN was really strong early this morning. Let me see what happened with PIN. PIN was number one in this view out of the gate this morning, right here. And it was at the top of the list. It ran all the way up to, let me move this down a little bit so I can see what I don't have the high and low in that. Up to around $32. But it could have been purchased here for under 30, and it was coming off the top of the list here, very strong, and look at the volume that came into this. So that's why it was near the list. But as it came down during the day, as it started losing momentum, because my combo looks for intraday range and volume, it would not have been at the top of the list. Hey, George, don't you have that TOS chart? Yeah, I'll post it. I'll put it in the Skype group. Okay, anyway, that's why it came down. Now let me look at the Boyd Gaming, which is in the same group, obviously, and we can tell that by looking to see how this group is doing, that the other stocks in the gaming group were moving too, because this dotted line started moving up. You can just flip around here very quickly. It's very easy to do. Now, why is this at number 15? And PIN, let's see if PIN even shows up now. It should. And PIN is clear down at number 183 over here in the lower left-hand corner. It's because the combo is looking at these stocks all day long. And it brings the ones to the top of the list throughout the day which best fit the combo. So here's Boyd Gaming again. You can see that the volume's very heavy and it closed near the top of its range. That's a very simple combo, but it works great. So there would have been an opportunity to buy this. Now let's say that we see Boyd showing up intraday. Put a little 5-minute chart up here. This is the way Boyd traded today, all over the place. Here's the opening price, right here. Moved up, shake out, moved up, shake out, and then it closed the day really strong. Notice these VPA flags and arrows indicating strength and weakness. These are strong signals. These are tests. And you can see what happens after the test, and then it goes up through the 3 and the 6 and the 18, and it closes on a high note as the market moved up. So that's why I keep this down here. If I happen to be looking for a trade, let me do this again just to clarify this. Let's say I'm interested in CNNE. And by the way, I haven't been doing this enough, but I will in the future as if you join me in that webinar series. We're going to look at the daily, we're going to look at the weekly, and we're going to look at the monthly. Now, what does this tell us by looking at all three of these at the same time? Here's the PDF for whoever just joined lately. You can tell that this is a very strong stock. Look at this monthly chart over here. Look at the weekly chart. 1 down week, 2 up weeks, 1 down week, 2 up weeks. This is why these charts are effective. We can visually see what is happening very quickly. Now, as you look at this, you say, so what? Look at the daily chart. It doesn't look so good. But as Tom Williams said, you always look to the left. And as we go from right to left, there's plenty of strength in this stock. And it started moving up today. Here was a test. Here was a test. And here was a confirmation of that test today. Not only a confirmation, there was an effort to rise and volume increased. It doesn't look like much because of this down volume, but let's go back over here to this bar. Remember Tom's statement, Tom Williams' statement that strength comes in on down bars? Well, this is a perfect example. They gapped it down. Here's the opening. Here's the close. Let me see if I can get in here so we can see this a little bit. Here's the opening. Here's the close. There's a circle here. Changing hands. Difference between the bulls and the bears are fighting that out, but look at the extreme volume down here. So this was a weak bar, but it's really a neutral bar by the time the day's over because the range closed in the middle. But strength appeared on this down bar because it traded up this high, and then shareholders weren't so sure if they wanted to hold it or day traders, so they dumped it. But then strength came in the next day. 1 down day, 3 up days, down day, barely a down day, but looking at it across here, this was holding up extremely well. Investment company. Wow, look at the earnings growth on this. This stock is under accumulation in the long term. Anyway, it broke out today. So and this was showing up earlier. I noticed it earlier because I looked at it because I wasn't familiar with it. So with this 5-minute chart, it's just a matter of putting this in here, hitting enter, enlarging this. And then if it's showing up early enough, if you catch it early enough, you can look for an entry point and go ahead and take the trade. It's tying Thinkorswim in with HGSI is just great. I'm going to start, I don't know, mid-February. Or it'll be mid-February when I start. Here's the PDF for somebody who just joined. We're getting some late joiners. So, and during the webinar series, I want to spend an awful lot of time doing what I'm doing right here and actually looking for trades. The problem is the webinars series will be later in the day, and a lot of these trades come up early in the day. I mean, we could try a couple of sessions early in the day if people want to. It's kind of up to you. I don't care when we do it, but that's something that we can discuss. Maybe have a short session early in the day and finish it up later that day. These are things we can talk about. Anyway, getting back to this, we want to look at all the time frames. We want to look at the recent bars. So this bar here looked like a weak bar because it opened here and closed here, but what do? You look down at the volume, not heavy volume at all. So is this extremely weak? No, it's not, because if there were a lot of volume, then you get nervous about it. But if there's not a lot of volume, it means that there's not a lot of supply coming into this. This held up. Remember what the market was doing over those days, and that's why we can look at this chart here. This is what the market was doing and the group was doing over these days, but this stock was holding steady. What does it tell you? It tells you that very few people were dumping their positions. They're holding on to accumulation. These charts give us a great deal of insight. Let's look at, I want to grab, let's look at Canadian Pacific. This stock is in a long-term uptrend in the monthly and the weekly. Notice how well these bars show up and keep you within a trend. If you get a 1-week reversal, and if you've gotten in down, say here, you're not going to worry about that. If you get 2 weeks, yeah, you're going to worry about it. But, you can always put a stop in. And what it did, it reversed, went green the next week. There's no demand there. And the next week it traded down. But if you're a weekly trader, you can't get too excited about these. This is how you stay in trends. Daily traders, you look at the screen too much, you're going to be in and out of stocks all the time. But this is why Williams always said to look to the left. You start looking to the left on the daily charts, you move to the weekly charts, and you move to the monthly charts. If you have a downtrend, then you're going to have some overhead resistance getting through here. But when things are going like this stock is out to an all-time high right now. This is a monthly chart. Or let me zoom out. Yeah, all-time high. And this weekly chart is keeping you in the trend of a stock like this. Look at these VPA flags on this. Canadian Pacific Railroad. Let's look here. Now this was a pretty negative day here. There was some distribution. But what day was that? Let's go back to the NASDAQ overlay. Now, the market was still going up then, but here, see this? The group was coming down. So that would explain it. But we had a green bar before that, and then we had a red bar. It held steady the next day, and then we had a test. I mean, it's not perfect every time, but the more you look at these charts and you go day by day, and Tom Williams did that. I've got a couple of his books where he looked at the SPX every week, and there's something called the VSA Club. I don't know if they still have it or not, but what he would do is he looks at every chart every day and he makes a decision. Is distribution coming in, or is supply coming in, or is demand coming in? And he compares it to the prior day's charts, and you get a totally different feel for it. I mean, this is so much better than looking at a bunch of indicators which really are lagging and they don't tell you anything. Well, they may, but you'll go broke trading with standard indicators. I'll tell you that right now. I mean, I've been doing this a long time, and I use very few indicators in my charts. But also, let me tell you this. If you like looking at this chart and you want to see what is going on, if you want to put it in context is the best way to say it, you just go up to these other charts of mine, and I'm putting this stock in context on the daily chart. Now, it's hard to see here, but I'll open it up so we can see it. So what is the context of Canadian Pacific Railway? It's above the 3 and it's above the 6. You can see the accumulation here. It's above the 18. It's above the 50. It's above the fan. So this tells me that this is a very strong chart. So you can have these charts side by side if you want to. It's a little difficult to see, with that box in there, but you can zoom out and you can look at the context. Here's the 3 crossing the 6. There was a pullback, and then it went positive. There's pocket pivots here. The 6 versus the 18, and it never did challenge the 18 going down through the 50. And here's your volume point of control. Went positive right here. So I think it's a good idea to use both charts, but I think it's much better to get a feel for what is happening with volume spread analysis, volume. I'm looking for number 2 here, my number 2 chart. Volume spread analysis, but then put it in context if you're more comfortable doing that. So anyway, that is pretty much it for these Williams charts, and then it comes down to practice. And I'm going to bring this PDF up again quickly, and let's just take a look if I can find it. Any questions? Do you like these charts, or you think I'm crazy? I like the ability to see the trends. I think it's easier to see the trends. Well, thanks. Play with them, and if there's modifications, I wouldn't modify these because this is the way he did it. Time will tell. Okay, let's look at this. I just want to show you this, how these are built. Price style is open, high, low, close. Last close to current close is what I compute the color with. And use these three colors. If the stock closes the same price, it's going to be a light green. If it closed up, it's this darker green. If it closed down, it's red. And after all of these years working with HGSI, and it's about 20, I never thought of doing this until the other day when I was actually cleaning my office, and I came across one of Tom Williams' books that I had, and I started looking at it. And I thought, well, I want to see if I can do that in HGSI. And sure enough, Matt had already had the settings in here to create these charts. So I just started playing with it, and the more I did it, the more I liked it. Okay, I was going to go back to that PDF file. I guess I closed that, unfortunately. Let me see if I can find it. Yeah, there it is. This is a program called Drawboard PDF. If for Windows users, it's very, very nice if you like to mark things up and read in here. These are the questions I want you to concentrate on, and you're going to be surprised how often you look at charts. Yeah, thanks, Steve. Thanks for attending. Strength will appear on down bars. We've always been, if you followed the IBD over the years, it's buy the breakouts. Well, that's oftentimes when you get your head handed to you. The smart money is looking to buy on the down bars to accumulate. Weakness will appear on up bars. Now that's contrary to what we think normally. And let's go, I've already talked about this, the background is vital. Let's go look at a few charts again. I've only got 3 minutes to go, but let's see if we can find a chart or two where strength appears on down bars and weakness appears on up bars. Paul, you were looking at a chart earlier, or posted. Yeah, do you remember what you were looking at where you had an example? Was it NEO? Okay, this is a good example of strength appearing on a down bar. This was the down bar right here. Here's where NEO opened. Here's where the low appeared, and here's where it closed. So strength appeared on a down bar. Now, this is an example of weakness on the prior day appearing on an up bar. So we have both examples here. Here's where it opened, traded up, and that was a new high at the time, but weakness appeared and these VPA flags came into play. And then the next day it gapped down, but obviously there was a lot of demand for NEO because buyers stepped right back into this chart. But these are the two principles that Tom Williams was talking about. Now if we look at these, I'm going to go to a different chart here. I'm going to go up to my fractal layout charts, and I'm going to go to a plain candlestick chart. You have your choice. You can do either one. You can see the buying that came into this stock on that day, and you can see the volume down here. It was higher than normal. Yeah, it was a shakeout day, no question about it. Everybody panics. I told people on the Skype board, pull your stops. And I don't know. I know Paul pulled his stops because Paul's still in this stock. And it's a perfect day. It's a perfect day for market makers. When fear comes into the market, all they do is continue to lower the bids. And by the end of the day, though, this stock was higher than on the prior day. But you can see the candles. Yeah, they give us a lot of information. Let me go back to the other chart. And there's just as much, if not more, information here because I can quickly see that this close is higher than the prior day's close. And here we go again. Here's a strong up move the following day, but where did it close? It closed right here. Let me zoom in on this. Closed here. So this was strength. This was actually weakness appearing on an up bar, wasn't it? Because it closed down in the range. And then the next day, here's another up bar, and it closed down here. So weakness appeared on that up bar too. And today, strength appeared on a down bar. It opened here, traded down to here, and closed here. You'll really get a feel for this if you spend some time doing it. Yeah, John, unfortunately, I know you got stopped out on that. That was a tough day. I mean, this market is just absolutely crazy, extremely volatile. I don't know, does anybody know why it shot up so much? Did Amazon release before the close? Here's Amazon. It was at 1871 when earnings came out. It's at well, didn't Who's say that it was an epidemic? World Health Organization, but not that scary. Oh, that's a problem with the markets. I mean, people react to all this news. It's just a perfect example of market manipulation. That's why you pay attention to the charts. You do what the charts are telling you, and you'll survive this nightmare of news. Okay, anything else? If not, I'm going to shut it down, and I'll get this posted. First of all, you can see how quickly that if you have a pretty high-speed computer, that these charts respond. Now, on my other computers, they don't respond nearly as quickly, but you can analyze 3 charts very quickly as you go through here. I got a Legend LED Legend from Lenovo. It's an i9 with their best graphics card, and it works great. Just go look at their site, search for Legend, and go to the far right and buy the most expensive one, Tom. It's only $1,700. Sure, did you get CNNE, Piers? Did you buy this today? Yeah, here you go. All right, I'll let everybody know when I'm going to start that webinar series. And the deal is, if you've never taken it, it's $4.95 if you've taken it, and if you're a member of the Insider Club, it's only $100 to repeat. Yeah, well, that doesn't surprise me, Peter. They're not going to remove him anyway. Let's get it over with and move on, okay? Anyway, thank you for coming. And I will get this posted hopefully yet today. If not, first thing in the morning. Thanks. Thanks, George. I'm glad you enjoyed the webinar. There's a lot we can take from Tom Williams. He was really one of the great masters of VSA. Thanks, everybody. Bye now.